Hello, folks. Welcome to Pro Trader Strategies Market Commentary for Monday, March the 8th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but in the webinars, I go a little bit further and drill down on these option strategies I'm trading in my portfolio and talking about in these daily market commentaries. But for you folks to find that optimal option strategy for any given assumption. And perfect example as of today, why we would implement certain strategies versus another strategy given our directional assumption. So without further ado, let's get on with the economic data, see how that's impacting the markets, and then talk about a couple of trades that I'm looking at today. All right, it's Monday, folks. Not a whole lot to see here. Across the pond, nothing. Here in the United States, we did get wholesale or final wholesale inventory. So remember, we've already gotten this economic data point. Came in at 1.3%, which is right in line with what was expected there on that data point. All right, so let's see. Crude oil moving higher again today. Remember, this Fibonacci $65 a barrel is lined up with our pre-pandemic high that we saw back there in 2019. Breached that. Today, seeing a little bit of weakness after testing $68 a barrel. So are we going to start rolling back over and maybe fall back into the 50s? That's what I'm expecting here. Yes, we did see some crazy crude oil inventory numbers last month, or last week. We should get some economic data points this week to give us a real clue as to see whether or not that demand for gasoline was really true, or if it was just this disruption that we were seeing from all of the cold weather across the United States during the time of that data point. All right, so crude oil starting to make a little bit of a topping pattern here. Obviously not confirmed. We would need to see some type of bearish candle here tomorrow in order to see that as a confirmation there. Now, gold was looking like we found a bit of a bottom yesterday. Yes, the wick did go longer, found a nice bottoming pattern there. What happened today? Not confirmed. Engulfing Friday's bottoming pattern. So that is broken. Looks like gold is going to continue on to the downside here after, testing that 1600 handle, settling within that realm on Friday. The bearishness is really probably got these gold bugs on their heels. Now remember, I still have on some GLD. They're absolutely worthless. Some long calls in GLD. They're absolutely worthless. So I'm just going to let those things probably expire for nothing. I was playing that for a bullish move. Never got it. All right, bonds Friday made a bottoming pattern. No confirmation as of right now, but I am expecting I would expect gold to make a bit of a turnaround too, folks, after the big sell-off we've seen, and the strength in some of these cryptos would probably drive gold higher, but it's just not doing that. And bonds finding a bottom on Friday. Are we going to confirm that and start making a move to the upside? Keep in mind, we do have a small little gap here in the bonds that we need to keep our eye on. That should be covered, and with a bottoming pattern here, that would be almost a sure thing to have happen coming this week, probably even. All right, if we get that confirmation, folks, that's only if we get a confirmation to the upside. All right, the VIX is moving a little bit higher, and, well, we've got the Dow Jones up almost 500. Why is the VIX moving higher? Well, we're seeing weakness in the Nasdaq as well. Tech sector having some struggles. We're also seeing this reopening trade do very well. We'll talk about that here in a little bit, where we're seeing a lot of the airline stocks, casinos doing well, pushing to the upside. So that reopen trade is doing well while the tech sector is struggling at this point. All right, Nasdaq here we see down 120 points on the day. That's what I was talking about with that mixed bag, despite the fact that Friday looks like we got a pretty solid bottom here, and that we would want to maybe trend along with this 2008 trend line, or 2018 trend line. I believe that's what that is. So all of those still intact. I think we'll probably start migrating along that to the upside. I don't think that we are really seeing a whole lot of topping pattern here, although some people were clamoring that this was a head and shoulders. We've got the left shoulder, the head, the right shoulder confirmed to the downside. You got your neckline pointing down. Are we going to follow through with that? That's something to keep an eye on as well. Is that a head and shoulders at the top of a big move that a lot of times will signal some bearishness going forward. But the way that the rest of the equities are seeing the buoyancy we saw over there in the Dow Jones Industrial Average, here in the E-mini S&Ps up 22 points on the day. Those are kind of pushing the rest of the broader market. You know, a rising tide will lift all ships. But with that being said, we're going to have to let this play out for a couple more days to really get an idea. Now, obviously, the day isn't over, and if we finish near the lows of the day, all those patterns are going to look a little bit different. But at this point in time, it looks like we're seeing the sector rotation right now, and I think that the broader markets will, in the tech sector, start to catch up. But seeing some weakness there as of right now. All right, so with my trades, UAL playing this to the upside. If we kind of zoom in on this, we can see that our implied volatility is relatively low on this trade. And if I zoom in on it here, you can see it is still relatively low for the last year. So with that being said, I don't really have to worry about anything going on. I do want to take advantage of volatility expanding, heading into another earnings. So I decided to go out in time into the June and buy the 65 calls in there for $3.35. 65 calls, obviously a little bit higher than where we are right now. That area around 60 is where we saw the market right before the pandemic. I'll draw it out to a chart here, and you can see pre-pandemic levels doing very well. So obviously it's trying to retrace that move to the upside. I'm going to play it. We have on this chart a confirmed bottom at this point in time. You can see a nice big doji settling below the 9-day simple moving average, which would signal some weakness here. But this doji to me is very strong and a confirmation to the upside. I'm going to be looking for at least to test that 65 strike there in UAL. So playing it because I know that I have really cheap premiums in here. Why? Because we looked at the implied volatility versus where it's been in the past, and that is a low level signaling that premiums are cheap. That therefore leans me towards buying an option. And if I'm buying with a bullish directional assumption, that is the long call in that type of situation. Now on the flip side, we got Square, and if I do the similar situation where I kind of zoom in on Square, you can see that if I draw the high and the low in here, we can see that it is very close to right around 50 IV% when I think that's 48 or something like that. So you can see I'm right in between there with a volatility that's right around 50%. That's kind of the rub on buying options or selling options. Well, with this being the case and not really having that earnings to give me that lift in the volatility right before that earnings, I decided to go in here and take advantage of this with the assumption volatility will start coming out. Well, if I expect volatility to come out because those premiums are pretty high or pretty frothy anyway, then that's leaning me towards a bullish assumption here. No, it's not confirmed. You know, I do have this nice bottoming pattern here in Square. There is no confirmation. It was looking a little bit better earlier this morning, don't get me wrong, but I'm still playing this to the upside with this bottoming pattern not being confirmed yet. So for that, I am a little bit early on this trade. Most people would like to wait till it's confirmed. I'm getting in a little bit early. And that being said, I went into the April and sold the 150 puts in there for a bullish directional assumption, collected $1.45. All right, so why did I do that with this trade? Well, because the expectation volatility is going to come out with this trade. Volatility is currently already elevated. So with that, I'm trying to take advantage of the volatility in here coming out, take advantage of theta decay. That's why I went into the near term April and sold the 150 puts in there. and take advantage of theta decay, volatility coming out, bullish assumption. Two scenarios where I have a bullish assumption in these underlines, but completely different types of strategies. Why are they completely different? They are based on the internals or what we're looking at going on in and around this underline. One has extremely low volatility with the expectation of volatility expanding. I can take advantage of that when I buy premium because as volatility expands, we see those premiums expand. On the flip side, with Square, I see high volatility already, so I know that those premiums are currently elevated. Therefore, I want to take advantage of expensive premiums by selling that. I'm picking the nearer duration to take advantage of theta decay, working in my favor, and that is what really drives us on these different strategies. Yes, we both have bullish assumption, or I have a bullish assumption in both Square and United Airlines, but because the underlyings have different volatility coefficients for themselves, then that is what's leading me towards these different strategies. And I drilled down on these details to streamline that process for you folks to find these optimal option strategies for that given assumption. So please check those out at protraderstrategies.com. That's all I got for you. Take a moment here at the end to go over our disclaimer, as we're an educational company, folks. I'm not here to try and solicit you guys to jump off the cliff with me with UAL and Square. No, I'm using these trades that I find as examples for you as to why we are using these specific strategies in and around these underlines. It's not always the same. Why? Because we have specific guidelines for you folks to follow and myself to stay mechanical in and around our trading day. All right, so that's all I got. Take a moment to go over the disclaimer, and if you can't take that, take it easy.